Are personal expenses deductible? When the IRS conducts audits on small business owners, their primary concern is determining if personal expenses are being falsely claimed as legitimate business deductions. Have you utilized company finances to cover the expenses of your child's bar mitzvah or bat mitzvah, and then claimed it as either an employee gathering or as a form of advertising? At times, it can be challenging to differentiate between matters of business and personal nature. Consider, for instance, the question of whether the expenses incurred from commuting between your residence and workplace should be classified as personal or business-related. The expenses incurred for commuting are primarily intended for generating income for your business rather than personal enjoyment. However, according to the tax code, these expenses are not eligible for deduction. Expenses paid with forgiven PPP loans. In an effort to mitigate the economic consequences caused by the coronavirus (COVID-19) pandemic, Congress implemented the Paycheck Protection Program (PPP) loan initiative during the period of 2020 to 2021. Banks and other participating financial institutions were responsible for administering the low-interest PPP loans, which were facilitated by the Small Business Administration (SBA). During the COVID-19 pandemic, numerous businesses were able to secure loans that provided them with the necessary funds to cover payroll and other essential expenses. By submitting an application to the SBA, businesses have the opportunity to have their PPP loans partially or fully forgiven, meaning they are not required to repay some or all of the loan amount. It is crucial to highlight that these loans that have been forgiven are not subject to federal income tax. Additionally, there is a specific tax regulation that permits the deduction of business expenses paid using forgiven PPP loan funds for federal tax purposes. Caution. Compensation provided to family members or to enterprises that are under their ownership raises concerns. While it is permissible to employ one's children or parents to perform tasks, any payments made to them must be fair and commensurate with the work they actually undertake. The IRS typically becomes aware of this through direct questioning or by identifying matching family names between the payees and yourself. On occasion, the auditor may raise concerns if the expense appears unusually substantial. Expenses you can never deduct. There are specific items that, despite meeting all the necessary criteria, cannot be claimed as tax deductions due to the potential violation of public policy by incentivizing these activities. Some examples of these non-deductible items include examples of government-imposed fines include penalties for late filing, speeding or parking violations, which are akin to tax penalties. Corruption, whether it be in the form of bribes and kickbacks to a local building official or an Arab sheikh, remains a pervasive issue. If a state or federal law deems it illegal, offering referral payments to obtain clients or customers is not permissible. Expenditures related to lobbying, political contributions, or disbursements made to purely social organizations. The expenses associated with bar or professional examinations. Membership fees for country clubs, social clubs, or athletic clubs are required to be paid. The federal income taxes that you are required to pay on your business income can be found in the Internal Revenue Code. Furthermore, it is important to note that the worth of services rendered cannot be subtracted. As an example, Dr. Pond generously offers complimentary eye examinations to individuals experiencing homelessness on a weekly basis. Typically, the doctor would charge $100 for this particular service. His time cannot be deducted, only his out-of-pocket expenses. It is probable that these out-of-pocket expenses would be classified as advertisement and promotion expenses,